Welcome to another Wall Street Informer production on WSI TV.
Welcome into another episode of WSI TV. I'm Sean Bauer, Chief Editor of Wall Street Informer on wallstreetinformer.com. And as you can see, I have a very special guest here with me today. He's our publisher here at Wall Street Informer and Chief Market Analyst, Jim Samson. Welcome in, Jim.
Hi, everybody. Hi, Sean.
Right now, I know we have a very important topic today because we've seen some very interesting market action. So the first thing I wanted to get your take on is this wedge that you've been warning us about for the past few weeks. Can you shed some light?
Yeah, the weekly update I do every Monday that comes out. Trying to keep a view on the overall market direction. Obviously, you can trade the overall market, but as individual trades get heavily affected by what the overall market. When I say the overall market, I mean the S&P 500, the New York Composite, the main market indexes. As you've seen in the recent weeks, I was identifying that what was a downwards wedge forming. So you've got this line of support where the SPX is kind of bouncing off it like that.
Right.
But at the same time, it was getting the highs and we're getting lower and lower and lower. So you get this wedge effect. And usually when you get that, that's kind of like a downwards pressure on this line of support. And we saw this week on Monday, it seems, that it's actually broken that wedge downwards, and that's what we're seeing in the. So we saw that one coming, and it's happened a little bit sooner than I think we thought. I think they'd limped through to the election.
Absolutely.
And it's more pronounced. And what's going on in the markets right now is you kind of got like this chart saying different things. We've got the S&P 500, which is kind of looking a lot healthier. It was out to new highs not that long ago. But then you've also got what's called the composite, which is all of the American stock markets bundled into one.
Right.
The ticker symbol for that is the NYA, which is the New York Composite, and that one's telling a different story altogether. That one is still very much hasn't hit a new high since May 2015.
Right.
And the disparity between the two indexes is really because I think the pension funds, due to low interest rates, have been forced into stocks, high quality stocks, like the S&P 500. So you've got the S&P 500 almost kind of like a bubble territory now, really. But the overall index, which includes the smaller companies like in the Russell 2000, which is another index, is dragging it down because they haven't benefited from, the pension funds are going to go more into the blue chips, like with the ones we see behind us, whereas they're not going to go into the smaller companies. So that's what's really evidence of this, this tale of two markets that's going on right now, and why I've been looking at the NYA, the composite index, for the truer, bigger picture of what's going on,
Right. Yeah, and I think it's fair to say that looking at any index, nothing looks healthy right now.
Right.
Especially that big picture NYA that you're talking about. And with this market action that we're seeing, we've been hearing the polls as we're leading up to the election saying, Hillary's ahead, Hillary's ahead.
Right.
Is the market telling us a different story with this action?
Yes, well, just to put some background on that, the overall, the stock market prefers Hillary to win.
Right.
Not particularly because Hillary's good for the economy, but because she's the status quo. It's a known quantity.
Exactly.
And the market hates uncertainty. So a Hillary win was kind of priced in for a while now. I think markets have, the predictions, the polls have been saying, and the bookies been giving him like 80 to 20 odds on her winning.
The entire lead up.
But why was the market stuck in this downwards wedge then? If it was a given that Hillary was going to win, how come, the markets have been in a sack,
Right.
So what the market, a lot of people would argue that, the stock market is a very good predictive tool. It's a combination of everyone's opinions, insiders included. Perhaps what the market was telling us is that, this whole thing wasn't in the bag for Hillary.
Yeah.
And the uncertainty is very much there,
Sure. And I know we had sort of a similar situation, and we touched on it a lot, with the Brexit scenario.
Right.
How do you see this correlating to what happened with Brexit?
Yeah, there's a strong similarity with Brexit, not just in stocks, but also the actual social kind of movement that's going on here. There's the Brexit they talk about it was a vote to leave the European Union. What it was really was an anti-establishment vote against what was perceived as global elites, and the Trump movement is a similar thing that's going on. There's genuine anti-establishment rebellion against the global elites going on with that. So that there's a political similarity, but also regarding the stock market, up to the day before Brexit, the bookies had this down, I think 70% chance that Remain vote was going to win. Right. The market had priced that. The market had acted as if right up to the day before the win was in the bag, and of course that didn't happen, and the markets sank the next day. The difference here, though, is that the markets are not acting like it's in the bag, which is yes, that the pricing of things might be a little bit more accurate here.
Okay, yeah, so some similarities, a few differences there.
Yeah.
Okay, just before we get off of the topic of the overall market and where we're headed, do you just have any final comments on what you think is coming up next?
Yeah, I think everything hinges on the election for the short term. Right. The market it's not going to like a Trump win initially because it's an unknown quantity. But if Hillary wins, the market will, it's not going to go much higher either. Right. So I think there's a good short-term opportunity here for betting on, a bit of a drop or some volatility ahead, because if Hillary wins, then where's it going to go? It goes up, hovers, goes a bit higher, who knows? It's not exactly going to celebrate, though. It would have done that already, had it, because it thought it was in the bag. And if Trump wins, it's going to go down. So the odds favor, you're getting an asymmetric kind of trade here where, a bet for the downside isn't a bad move, because what's the worst case? You're not going to lose that much. Longer term, again, this is the tale of the two charts. If you look at the S&P 500 here, it doesn't look that bad. It looks, if you were to just look at the S&P 500 in isolation, I think you'd think, this could be the start of a new leg for the bull market. But the contradiction, and this is what really, makes it, muddies the waters, is that the overall composite, that composite index I've been explaining, the New York composite, the NYA, is painting an entirely different picture. That's showing that this is pretty much like a bear market rally, really. Right. And the idea is that indexes are supposed to confirm each other. You shouldn't have this disparity like that, and that in itself is a bearish indicator. Right. Yeah, that's actually, that divergence in the indexes is something we've both been commenting on. Yeah, which is why a lot of professionals look at the NYA, the composite index, so that we don't get caught out with these non-confirmations. Yeah, that's something that's very simple to do, a big mistake you can make. Yeah. Okay, well, one of the reasons I really wanted to have you on today is because we just saw some really interesting action with Facebook stock as earnings just came out. Right. Do you want to talk about how, the insiders sort of gave us a hint into what was going to happen without them even probably knowing? Yeah, so Facebook reported after the market was closed yesterday on November the 2nd, right. Which is quite common to do that. And they announced a rise in profit, so it's good news. Right. But what was interesting is that in yesterday's trading, before the profits were known, the stock took a very significant dive. Right. So obviously those results, insiders, as is often happens, insiders got wind of the results, and you had a clue there as to what was going to happen. But what was surprising is that you could see the insiders, we saw the insiders selling yesterday before the announcement came out. So the assumption could have been, reasonably have been, profits are going to be down then. Right. But there was a surprise when the Facebook announced higher profits. But then when the market opens today, true enough, the stock has plummeted. Yeah. Looks like about where is it? It was around 130 yesterday, and it's down to 120. 120 today. Right, tanked. So a significant drop for Facebook there. The insiders were telling us much yesterday. They knew that the market wasn't going to like that, having a profit rise. So one would argue then, why did the stock plummet after the announcing good news? Right. And I think there's a combination of things. Well, first of all, that's a bearish sign for the overall market. If things are selling off on good news, very good point, then there's a sentiment problem there. And the other thing to bear in mind is that Facebook is what is in one of the, what has been termed the FANG stocks, FANG, for Facebook, Amazon, Netflix, and Google, which are kind of the stocks that have been powering this recent high running stocks over the last 2 or 3 years, really.
The true leaders. The true
stock market leaders. Actually, I think Amazon and Google have been responsible for 65% of the stock market's bull run in recent years.
That's right.
So you can see the reliance here on these stocks in terms of keeping the whole thing running, and how that there's really a big distortion going on here.
Absolutely.
So it's very important to keep an eye on the FANG stocks, because obviously when they start running into trouble, then it spells trouble for the whole market.
Right. And for a market that's already struggling, it seems like they're just being held by these four very shaky legs right now.
Yeah, and Amazon had a bad result the other day. Netflix and Google are kind of hanging in there, but still not looking as peppy as they did.
Right.
So it's all adding up to, I think, an increasingly, toppy picture for this market.
Yeah, absolutely. It's becoming clear to us that most things are running out of steam right now, and we'll see the picture unfold as the election unfolds. All right, well, Jim, I want to thank you for being here with me today.
Thank you. Thanks for joining us.
Yeah, absolutely. Thanks for being here as well. And we'll speak to you next time.
See you next time.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com, where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.